What's going on, everyone? Welcome back to episode 26 of the More Smarter Show with your hosts, Jake and Dylan. Jake, what do we have on the agenda today?
Today we have Ben Trageser, which, Ben, I've known you for a few years. I thought your last name was Trageser, but learned something new today,
Yeah.
2 minutes before recording. Ben is with National Tax Planning and is not going to talk to us about the inner workings of accounting because no one gives a shit about that. But he is going to talk to us about his career path in becoming a partner in this awesome company. Ben, what's going on?
Hey, pleasure, guys. Happy to be here.
Have you on? I mean, one thing that you put, and I kind of want to just get right into it here, is you put that you became a partner in the firm January 1st, and the financials has 12x'd since you joined.
Yeah.
How is that even possible? I mean, that's like doubling every month.
Yeah, no, it's been kind of a crazy ride. So I think overall my experience just coming back from Big Four accounting, kind of putting systems in place, really just kind of helped that. As well as kind of just refining our offerings, kind of getting the right clientele, obviously. So, I mean, basically the firm itself, we're a high-powered tax planning firm that also does tax preparation. So essentially we work with clients who have a tax problem, right? People that make a lot of money, pay a lot of taxes, right? Those are kind of the people that we help. So it's really just finding that clientele and then making connections with different vendors and other people and kind of vetting things from a strategy perspective, really just kind of refining that. But I think a lot of the times, especially when we get clients coming in, we typically hear two things. One, either like my CPA, my tax preparer, they only do tax preparation. They don't do any planning or strategy. And the second we hear is my CPA, I never hear from them. Their communication's horrible, right? So kind of on that trend, really just putting processes in place to continue to talk to people, make them feel heard, right? Kind of having them just be happy with services and kind of that proactive approach. And it's really just snowballed from there. We haven't done any marketing. It's all just kind of word of mouth at this point and just keeping on top of things. Yeah.
Have you used the term high powered before when describing your company, or did you just come up with that? Or is that like a thing you guys do? You guys have like an internal meeting and say, hey, we're high powered.
We've used it a few times as a buzzword, so I figured I'd throw it in there.
It really got me going. I wrote it down.
Yeah, there you go.
High power.
Yeah. Use bespoke, other types of words. Yeah, make it sound fancy.
Love that. So, I mean, I think Jake is a client of yours, right?
He is.
I am.
Am I allowed to say
That's
that?
awesome.
Yeah, you are. Yeah.
Yeah. Okay. I don't know. Maybe we can cut that out then if we're not allowed to. But, so, Jake, have you experienced those two key factors of great customer service that
I
Ben
have.
offers?
Yeah. That's why I invited Ben on the show.
Yeah.
So I had a similar experience to what Ben is describing with my former accountants. And, again, it's not that anything was being done wrong. It's just that I want better service. And it's interesting because I've thought a lot about the accountant's perspective. And Ben, you could speak on this, but why would you give me attention? If you're making a few $100s per year doing a tax return, obviously there's more costs if I want more out of that. But I don't blame accountants for not answering my calls.
Yeah. I mean, a lot of times, honestly, accountants are overwhelmed with work. There's a shortage of accountants in the industry. We keep hiring people just because our clientele's growing and we want to continue that level of service throughout, right? But yeah, I mean, when you think of the simplistic tax return preparation, it's okay. February, March, give us all your stuff, prepare the return, done. Okay, see you next March, right? So again, why do more than that? But I mean, with the tax code out there, there's so many nuances of things that people can take advantage of that people just don't know, right? And it's no fault to them because, right, I'm not an expert at HVAC, right? I don't know all the nuances of that, but that's why I hire somebody to do HVAC, right? Same thing kind of with accounting, right? We've kind of done everything to understand it, right? And then give clients that kind of peace of mind when we're talking to them, right? Because essentially that's what they want at the end of the day. They want to make sure it's getting taken care of and doing everything in their power to put more money back in their pockets.
Yeah. I want to dive deeper into how you make money because, again, I wonder that. I know how a realtor can make money Because I might only sell one person a house every 10 years, but I'll make $10,000 from there from every 10 years.
Yeah.
So for you, you're looking at more like $1,000 every year. So to make $100K, you'll need 100 clients, right?
Yeah.
Am I missing anything there?
So there's a lot of things kind of going on in this space. So your typical tax prep, which is your yearly $2,000, $3,000, right? Whatever the price ends up being based off complexity for the returns. On top of that, there's also a ton of tax planning. So essentially, we previously were on an hourly basis, right? We've moved to kind of packages for people just because we found that's better. But I mean, we have different types of high net worth, talking like $6-7 million a year working for a tech firm, to people that own businesses, to people that own 30, 40, 50 rental properties, right? So the way we basically make money is the prep, right? And the planning pieces, so packages, as well as also we have collaborations with other firms where there may be a referral compensation or something based off strategy. So that's kind of the three main pieces of things in terms of where we are for funds.
I guess, is there ever a scenario where someone could pay you $100,000 in a year?
Yeah.
Okay.
Yeah.
So there's that much level.
We have clients that have just based off structures have 50 different partnership returns that we do for them because they have all these different properties and X, Y, and Z, right? So it depending on the complexity, right? And then kind of their needs from a planning perspective, there's a potential, yeah.
So when you're doing that though, so you were just saying different payment packages, is that something that you just speak with them about, or do you have like a system and you have to like kind of base it per person and spend more time per person figuring out how that payment would work? Or is there like, all right, you make X amount, you own X amount of properties, this is how we do it, this is how you pay us?
So, I mean, in terms of the prep, it's essentially what we do is once we complete the return, and Jake knows this, we'll provide you the draft version of the return, and it's locked by the invoice. So essentially you pay the invoice, it unlocks the return, you review the return, and then any questions, we go over that, and then we file on your behalf. Planning is a little different. So essentially with that business model, it's a year package, and we take those funds up front in terms of, I guess, sorry, what was your question? How do we know how to price things? Or I guess what is it?
Yeah, so I guess it was too much. It was like a two-part question.
I didn't understand it either, Ben.
Yeah,
don't worry.
Okay.
So more of what I'm wondering, I guess, is for those, so more of how you delegate your time, right? So there's actually servicing the client, and then there's the back end side of it where you're trying to figure out how much this client owes you or how much they're gonna pay you. So who's doing the work to figure out how much you're charging the person?
Yeah, so that comes with the initial quoting. So either like myself or my partner will kind of look over everything they have going on. So we'll ask for their prior 2 years of tax returns, copy of their books, kind of things to see what kind of moving parts they have. And we'll also have an initial discussion with them to kind of just get a grasp of things going on, right? From there, kind of based off of how much time we think they'll need, complexity, right? How many things we can do with them. That's when we'll kind of price that package for them for planning and then for the preparation as well. So if you're a business owner with 500 employees, that's a much different planning package than someone that's just working a W-2 where there's some different other strategies we have. So just kind of, I mean, again, with any business, with any type of thing, it's just kind of I don't want to say you try it and then you find out, but over time you figure out what works best for you, what doesn't work best for you, right? Because at the end of the day, you don't want to spend your time chasing clients for payments or other stuff, right? You want clientele that value, I mean, I'm sure as realtors, right? Value your time, right? They understand that you have a specialty, something that you work in, right? And compensated accordingly, right? And obviously you'll have some clients that say, well, why am I paying for this? Why am I paying you for this, right? But it's also kind of a level of trust, right? When you guys sign a new client and you start showing them houses, they trust that you know what you're doing, right? And that you'll get shit done for them when they need it. Kind of same here, right? It's overall building that level of trust with people, right? And kind of saying, hey, I have a track record, give me a limb here and I'll save you a ton of money.
Yeah.
Okay.
We had our last guest own a power washing company. And I said to them, do you ever realize that the worse job you do, the more often you're going to be needed again? Where if you don't power wash too well, they're going to call you back next year instead of in 3 years. You're going to make more money. It's obviously not the best fiduciary thing to do, but that's a fact. Does that ever cross your mind? Like less explanation means more planning? And that's not coming from experience. I'm not feeling that you do that. Trust me.
Yeah, no, it's a good question. I mean, it's kind of that fine line of, I mean, I'm sure with the power washing business too, right? You want to make sure you're doing everything for the client, right? Possible, but also keep them coming back, right? And I think what we do with that is we're constantly out looking for new different strategies. Like I talked to somebody yesterday about essentially a cost segregation study for land minerals. So like people that own farms and acres, things like that. I talked to somebody the day before about wildlife conservation and like how that can be a tax benefit. So kind of outside the box, different things every day that we're looking to find. So if we have 5 strategies that we think work for you well this year, we're probably going to have 8 or 9 next year that are different, right? Because new tax laws changing, right? New strategies are coming out, right? People that own businesses, they can make a killing one year, and then next year it's not as much. So that kind of plan changes, and that's why when we have these packages and quarterly calls, we adjust the plan accordingly for the year. Because you could say, hey, listen, man, I'm going to sell 500 houses next year and make $1 million. Well, you could only sell 300, or you could sell 1,000, like theoretically, right? Like it changes. So that's why kind of from year to year, the planning itself changes. Some of the elements still may be there, but overall things are going to differ from year to year.
Totally. I mean, I am loving this right now because as of right now, I am the newbie guy that uses like TurboTax.
Yeah.
So, I mean, I think I just got to a place like this year where I like it. So this is all of these questions I'm about to throw at you are like legitimate. But so, I mean, what would you say is the biggest like the first thing that you kind of started off the podcast with was when you make more money, you need more help to figure out because you're paying more taxes. What's the biggest flag that you would say for a younger person to be, you should no longer be using a place like TurboTax to hire the professional?
Yeah. I mean, I think it comes down to a couple of things, right? Your value of time. So essentially, you could spend all day on the internet and chat GPT trying to figure out this stuff, right? But you could come to us and we could tell you it in an hour and point you in the right direction with different people, right? I think it also depends on your industry, right? So if you're a W-2 job, if all you have is a W-2 and you're making decent money a year in one state, TurboTax is probably a good option for you, right? Unless you're in the $500,000-$600,000 a year, then there's the kind of stuff we could do. When it comes to businesses and especially like realtors, right? Kind of similar situation. It depends. I think there's a lot of structuring in terms of things that like S-corp election or other stuff, right? That could definitely save you. I think kind of once you've hit that $60,000 to $70,000 a year for realtor income, that's kind of when, okay, maybe you start having some conversations, right? So it's kind of just everyone's situation's different. I mean, I think it's always worth a conversation. And at the end of the day, right, when our costs can be offset by the tax savings, that's kind of your sweet spot, right? Because you're getting a return on your investment.
Yeah.
To answer your question, I don't really know. So everyone's situation's different.
I would say the answer for me is yes, right?
Okay.
Yeah, with the S-corp election that we can now do in New Jersey as of 2025, I think immediately, no matter how much you're making, you should do.
Yeah, and like not to get all you told me to not get taxed technically here, but like
my bad.
top of the other stuff, like our firm takes like a holistic approach. So basically we like to see everything you have going on from like retirement accounts, other things, because essentially like the financial world and the tax world, they're intertwined, right? Like you open a retirement account, you open a solo 401k, there's tax benefits to it, right? So essentially it's kind of building that generational wealth for people. And then real estate's also a good option for just investment as well. Like I'm an investor myself, right? Just kind of coming up with that game plan. Cause like similar to me, like as I mentioned before, like I could trade stocks all day if I wanted, right? Do I know what's really going on? Enough to be dangerous, but like not to do it efficiently. So that's why I have someone that does it for me, right? Yeah. I think overall it just makes sense.
My 3-word parlay hit, Dylan. I had Ben saying it depends, holistic, and generational wealth. So in all the poly market betting lines have all hit. Thank you, man. Now it's under 20 minutes. That was an easy win.
I think the fourth one should have been enough to be dangerous. That's what's an all-time quote right there.
So Ben, how do you scale accounting to where you can be hands off?
Yeah. So I think that really comes down to just putting systems in place, right? like at the end of the day, as an owner of a business, you don't want to be doing the grunt work or the lower level stuff. You want to be focused on kind of what's going to bring in the most money overall, making sure systems are flowing properly. So like we have a platform called Taxstone that we utilize. We utilize it from like a CRM perspective, from a client organization perspective, from an invoicing perspective. Like we have pipelines, so everything's automatically flown. So really just systems, putting systems in place to make sure that no one's getting left out. Everyone's getting the attention they need. And kind of from there, finding the strategic hires to then ensure they can be doing some work while you focus your attention on growing the business even more, kind of becoming more hands off, right? Because especially in the accounting industry right now, the hot thing is private equity buying firms, right? So essentially you grow them to a spot where they're making a ton of money. A private equity firm comes and scoops it up and pays you a big day. And then you sail off into the sunset, right? It's really up to preference. Like So in terms of scaling and kind of being hands off, it's really just putting those systems into place.
So is there ever a time where someone's using you and it's like, hey, now you're using my assistant, or using, like, now instead of me, you're going to reach out to this person?
Yeah. Yeah. I think that's pretty gradual, right? I mean, I think that's kind of something we're focusing on is, I mean, we have staff members in place that do a fantastic job, maybe even better than what I could do, right? And just kind of, again, making sure, even if it's their servicing the client, right? But we're kind of in the background saying, hey, how are things going? Just want to check in how so-and-so is doing, right? Because at the end of the day, we want to make sure you're getting the same level of service, whether it's from me, whether it's from my partner, whether it's from somebody else, right? Kind of that consistent experience overall from being a client. Right. And I mean, people we work with have the same thing. Like there's one vendor that we work with that the guy said, listen, my business has grown exponentially. Right. Here's your new point of contact. If you have any like huge fish, come to me. But that guy's been great. He's been maybe even better than the original guy. So I think it's kind of a natural progression of growing a business.
That's natural progression. But do you think that you can lose any business from that because it's like less of a personal touch?
I think if you keep the same standard of care, but like the same client experience, even if they're working with other people, at the end of the day, I don't necessarily think people care as long as they're getting what needs to be done and they feel like they're being taken care of, right? It doesn't matter if it's coming from me or you. I think people understand that, like when businesses are growing, but it's a weird issue to have because, not issue, but situation to be in, because some people are very accustomed to coming to me, coming to Jake, coming to Dylan, right? When they have questions, and kind of unraveling that a little bit more and saying, hey, go talk to this guy, right? Like there's a gentle way of going about that. And again, just making sure people are taken care of.
Yeah, it's super on topic to what Dylan and I discuss on and off the podcast, but we're self-employed. I mean, all of us, if we're, as an accountant and as a realtor, we're self-employed. Although we have our businesses, we're really the people of the business.
Yep.
And I'm constantly hiring within my self-employment. I always have showing partners for houses. And what I like to say, which is 1,000% true, is, hey, I could serve you better if someone else shows you the home, because now I can be behind my computer. I can talk to the agent. I can now focus on all the deals I have, rather than just if I'm out showing to a different client, you won't get in touch with me.
Yep.
It's similar.
Yeah. And like likewise, it frees my time up to go find more different strategies to put clients in to make them save you. Like it's just a better business model in general, right? But again, it's tough when you're a one-man shop, you're a two-man shop, woman shop, right? And they're used to coming to you, and then you just kind of grow. So yeah, but to your point, Jake, right? Your time can be better utilized doing other things, talking to other agents, doing stuff, right? When you have showing partners, or like you have transaction coordinators, or things like that.
Both my time and their service actually is better. It's better servicing the client. And you should just group text, but you have green freaking text messages, so you can't even do that. Just get an iPhone and then just group text your assistant.
Yeah, you're on my Google Voice. I do have an iPhone.
Holy shit.
Yeah.
Wow, how does that feel, Jake?
Yeah, dang. Not good.
You're lucky though. Not many people have my phone number. Usually it's all email. So you should feel a little lucky there.
Yeah, same. Likewise.
Wow, that's actually awesome. I mean, I think that is next to impossible to do as a realtor, but that's a prime example of a system that you have. Yeah.
Yeah.
I have a Google Voice number, and I tried it once, and it was brutal. My management company uses one, but that's like, we have 6 of us. We have to.
Yeah.
So I would,
I mean, I still have my old Rochester area code 585. So when I started doing like real estate and other things in New Jersey, I wanted a New Jersey area code, but I didn't want to switch my phone number. So that's why I had the Google Voice. And because usually if I call a New Jersey number from a New Jersey area code, they may pick up. If I'm calling from Rochester, New York, they're like, "Who the fuck is this guy? I'm not picking this up." Right. So
how do you differentiate? Sorry, Dylan, you were going to ask a question, but now I'm really curious. How do you differentiate when you're meeting someone which number to give? Like my neighbor has my Google Voice number, and I'm like, it's so annoying.
anything real estate or business or somewhere along that lines, Google Voice number, anything like other people, my regular number.
But there's so much collab there, at least for me.
Not really. I don't think so.
Maybe not for an accountant, but for a realtor, I mean, my friends are my clients all the time.
That's true. Yeah. You're just in the cusp, Dick. You might get my regular phone number someday. Maybe.
I can't wait. Maybe 2026 is my year.
You got to make a certain amount of money first, and then
That's
you can
fair.
get to that point. That's great. So I want to hear like a day in your life, because it seems like there's the planning side of it, and then there's like the one-stop shop service tax return type. So where do you spend the most amount of your time?
Yeah, so it depends on the time of the year, right? So when you get to the February, March, April time frame, it's kind of all hands on deck for preparation. So I'm in there reviewing returns, making sure things are getting done. This time of the year, it's basically all planning, right? So making sure people are getting their stuff by year end, right? Making sure they're getting any last tax strategies, stuff like that. With that being said, as we've kind of continued to hire people, I've tried to kind of take a step away from the preparation and more into the operations of the business. So making sure from a client experience, people are getting everything, making sure that we're doing the best to utilize everything in our power to go ahead and just make things more efficient, right? Not having to do the manual follow-ups, making sure our clientele are in the right pipeline, right? Following up with leads, things like that, to really just make sure our team members, our employees can do the most with their time too, as well, right? Because I come from a Big Four background. So I was at KPMG and Deloitte previously, where essentially they love to work you into the ground. Essentially 70, 80-hour weeks during tax season, 50-hour weeks the rest of the year. And when I came out of that to kind of my own side of stuff, just from like a work-life experience perspective, I didn't want to do that. But also, I don't want people that work for me to do that, right? I want there to be some type of, like work-life balance, right? Like PTO, but I'm serious with that, because like, I don't want to work all day because I have other stuff I want to do, right? And I want our employees to have some type of balance, hang out with their kids, right? Be able to go out on a Saturday and not worry about like a mountain of work coming on Sunday. So really just trying to put all those processes in place. Like I know like the big buzzwords like AI, right? Like seeing how we can utilize that for our firm, right? Again, it's kind of that allocating our time to other stuff to be more efficient. And just like naturally, I like the entrepreneurial side of things, kind of growing the business. Like you can see the baseball cards behind me, but like my first business was baseball cards. So I bought my first car in high school. Like there's a lot of things there.
Samesies on that one.
Yeah.
But so, and actually samesies here where you had a job and left it.
Yeah.
And did your own shit.
Yeah.
Tell us about that move. How did you know it's time?
Yeah. Honestly, I got laid off.
Shit.
It was a blessing in disguise because I was miserable at the job.
That's what they all say, Dylan. That's what they all say.
Yeah. I'd thrown around the idea for the longest time, right? Of, okay, I love the entrepreneurial stuff. I've done it in like my personal life I was doing baseball cards. I was doing Poshmark and clothing and eBay as well. Like I love the idea, like the harder I work, the more money I make. And that's kind of, you guys are in real estate. You get that. You don't just get a salary. You gotta go sell the house to make money, right? I can always enjoy that, but I didn't necessarily want to work in like just a sales role. I wanted something that can kind of build, right? So, for years I'd thrown around the idea of starting my own thing. So I ended up starting my own thing. After that happened, I was like, listen, we're at a point where like financially we got a little bit of a cushion. And if this doesn't work out, I'll go back to a regular accountant job, right? So I started just doing as much research as I could, trying to figure out like how to grow the businesses, things like that. I ended up reaching out on Bigger Pockets, believe it or not, to who is my current business partner. Because I had chatted with him in the past and he started his own business. He had been doing it for a couple of years and said, hey, we'd love to kind of pick your brain, see what's going on, have a conversation. So he's based in Dallas, but he's originally from South Orange. So he messaged me. He's like, actually, I'm going to be back home in a week. You want to meet up? And I was like, great. So we met up in Montclair, grabbed coffee, had a conversation for like an hour and a half or so. To kind of just like get to know the business, what he had going on, things like that. Left that conversation feeling pretty good. And we circled back like a day later. He's like, hey, I'm actually looking for a partner. Do you want to just kind of merge firms and do this? After some thinking about that and kind of going over everything, took the leap, right? I wasn't guaranteed anything, but just kind of bet on myself that we could grow this thing. And it's been more than I could have ever thought, right, in terms of things. And I feel like kind of coming full circle on that, like getting laid off at the time sucked, but like, hey, I was kind of happy. I was like, great, I don't have to work anymore. It was a weird feeling, right? Because like all I did was work and had a job, and then I didn't. And I was like, what do I do now? So it's okay, right place, right time, right? Mm-hmm. So I think just overall, just like from the business mindset, it was something I enjoyed doing, not necessarily tax, but just kind of business and growing business and getting clientele in general.
When he said that you guys were going to join, you were like, I'm going to review everything and then make the decision. What were the things that you were reviewing? Was it I'm going to go to the job, like go to the other job, or go out, or what was the plan?
In terms of like his business, or in terms of what?
So in terms of the making that leap to go into
I mean, I had a pretty steady clientele of people that I had kind of started my business with. I actually ended up doing some contracting work for him for the rest of the year. So essentially kind of like a trial run. Like if I work a couple months with you, see how your systems are, see how I can improve stuff. And if I hate you, then call it a day, right? But it ended up working out well. We had an employee in place at the time. She's great. And we've kind of figuring out her, right? Kind of seeing what's just, well, at the end of the day, like business, anything else, like it's just a relationship game. Like if you like the people you work with, you're going to be happy, right? If you like your clients, like from a real estate perspective, great. Like you guys don't want to work with dicks. Like you don't want them as clients.
Dylan
right?
loves, well,
no,
yeah.
No, I don't like it. That's why I fire him. Like it's, yeah, you want to work with people you like.
So basically you were like, hey, I got all these clients, most of which came from me, by the way, for the record. I have a lot of referrals from me. You know it. So I got all these clients on my own thing. And here, partner, I can bring in these leads, more than leads, these customers for you, and we can just merge, and then and I guess you figured out a percentage of what made sense based on the portfolio you were bringing over?
Yeah, so it really, certain percentage. I mean, we're 50-50 partners, so that was kind of something. I mean, from bringing my experience from like working at huge firms, I had a good concept of processes in terms of like, that's kind of the gold standard, right? But he didn't really have that experience. So that's why I was able to kind of come in and tweak different things to make them more effective.
Sounds like exactly what I'm looking for a different industry. I don't know what industry yet, but I feel like I would be good at what you're good at.
Mm-hmm.
And I want to take someone who has experience in a clientele already and merge with them in some capacity.
Yeah. I mean, I think then at the end of the day, like we complement each other very well. Like when you partner with someone, like you don't want someone that thinks just the same as you, right? Because at the end of the day, like he's very technical in terms of his work. Like he's great at that, right? Me, I'm technically very good, but he has a lot more experience, and that's what he enjoys doing, right? So I think, kind of having that ability to kind of come in and merge different personalities, merge strengths, right? And kind of find a right partner there is great, right? And I mean, any type of business, like I've had clients that have bought into like nail salons or other stuff, right? Where they're good at process. The person that is running it is good at nails or whatever the business is, right? And then kind of having that I mean, partnering is marriage, essentially what it is, right? So you want to make sure you work well together.
Does it ever get to a point where you're doing more work on a specific client than he is, and it's like, all right, why am I splitting this?
Yeah, I think it definitely is, but I think also it goes both ways, right? Like we kind of when we set up the partnership, we had our roles very defined in terms of, okay, I'm handling this, he's handling that, right? Over time, they've definitely intertwined together. But at the end of the day, it's the same. We have the same common goal here, right? And yeah, it's not like if he was working 20 hours a week and I was working 60 hours a week, then yeah, I'd be probably pissed and say something. But it's not really the case. Again, it comes down to kind of a trust level and just ensuring you guys are getting stuff done. Like if I
Now, I
want to
know
work on a Friday and he wants to do something and whatever, but he'll work on Sunday or like as long as work gets done, it doesn't matter.
I know you said you have the same goals, and I assume what you mean is you both want to just do a great job for your clients. But did you guys get in depth of talking about your goals for the company in 10, 20, 30 years?
Yeah. So I mean, we've had conversations of, okay, where do we want to be next year? Where do we want to be in 5 years? What do we want to do in 10 years? So he's got about 20 years on me. So he's much older. So his goals may be different, right, than mine. But overall for the company, I think we've kind of have similar goals of where we want to be in terms of projections, right? In terms of clientele. What clientele do we want to be? Like how much, what do we want the revenue to be? Like things like that. So I think like at the end of the day, again, we kind of learn a lot on the spot too, right? See things that work. But in terms of aligning on goals, right? It's yeah, we've kind of discussed things of where we want to be. Is the 5-year plan going to change next year? Probably. But like we'll see what happens.
Yeah. My management company has partners. Them and we actually have a meeting in a few days. We have a quarterly, but also a yearly meeting about this topic a lot.
Yeah.
Because in partnership, it starts as my goal is to have a great company. Something broad like that. Yeah, of course, we're all on the same page. We want to be really great. We want to make a lot of money too.
Yeah.
But then as you get older, what I think is a lot of money is different than what someone else thinks is a lot of money. What I think is a lot of time commitment is different than someone else thinks, unless you have those quarterly, yearly meetings to get on the same page. Crucial.
Yeah. Yeah. I mean, it's funny you bring that up because like with our clientele, we have clients that make the client that makes $6 million a year versus a client that makes $200,000 a year. The value of money is different, right? It's just kind of it's money is great, right? And obviously we're working, we like to make money in this economy, right? But also kind of, there's other things like what lifestyle do you want to live? I'm assuming you guys don't want to sit at a desk 9 to 5. That's kind of why you chose the industry you chose, right?
I think Jake wouldn't mind that. Jake wouldn't mind that.
I don't show houses. My team does.
But yeah, I think like, especially when you bring more and more partners in, there's more kind of mouths at the table, right? To figure out what do you want to do? It's just a personality clash, right? It comes down to, again, you guys got to get along and figure out what you want to do and make sure you're aligned. Sometimes partnerships don't work out. You have different viewpoints of where you want the direction to go, right? That's why marriages, not to give life goal like advice here, but like that's why marriages break up. That's why partnerships break up. Like that's why any relationship breaks up, right? Yeah.
It has to be very clear too. And like not only the goal has to be clear, but the motivation behind the goal. Like why do you want to make that much money?
It's more the why. The why needs to be aligned than the what.
Yeah, and that's why I think when you start any type of partnership or anything, be very clear. Yeah, clear in terms of responsibilities, roles. Like we have in our agreement, we review the partnership every year to figure out if anything is different, right? So that's kind of something we put into place because over time things change, right? And obviously we have things in place if he wants to get out or I want to get out, right? Here's what's going to happen, right? But I mean, even all the lawyers in the world that we've talked with about running up these contracts, reviewing these contracts, things like that are like, at the end of the day, it's just based off of what you guys want to do, right? Like we could put all these different clauses, all these different things in here, but like, it doesn't really matter.
So would you partner with someone else in some other business if you had that opportunity?
Yeah. Yeah. I mean, we had a commercial property fall through that we almost purchased, and that was one of 3 partners, right? So, I mean, I wouldn't hesitate to partner in a business or in real estate or anything else. I mean, as an accountant, right? If the numbers make sense. Selfishly, with real estate, I want it all to myself. But
yeah, same.
Obviously, sometimes that isn't going to happen, right? Yeah, again, I wouldn't hesitate. It's just, I mean, I was very diligent about understanding. That's why I kind of spent that time contracting, working under him, kind of getting under the hood of the business to understand it's something I really want to jump into. That's kind of why I was very diligent about that. And I wasn't just going to jump into something. And I kind of see it all the time with clients that have businesses. They just jump into something because like they heard it on you, they heard it on TikTok, they heard it on Instagram of like, man, car wash business is great. I know nothing about it, but I'm going to make a ton of money. I'm jumping into it. And then they're 2 years later and they're bleeding money. And they're like, did you do any analysis of this? Did you think about this? Like, no.
Yeah.
Well,
there's a good and bad to that though, because you want to be obviously smart with your decision. You don't want to make a foolish, quick decision. There also, like Jake and I talk about this a lot, there also needs to be some, naivety towards.
Of course.
Yeah.
So, how did I know you were going to say the word wrong? That's crazy.
Naiveness. So there's that, and that, I mean, that's something that I'm still working on. Whether that's like trying to invest in real estate or do whatever. It's funny you said the age gap with you and your partner, because Jake and I have a similar age gap. Jake's only 10 years older than me.
No, he's old man.
10 years.
10 years.
Not 20. Only half.
Yeah,
only
Ben's
half.
example was 20.
So only half this time. But it's similar where Jake and I obviously have the podcast, but we also just talk about other things with business, where our ideas of what work looks like and what the future looks like for ourselves are different. And for me, I am okay with showing houses right now.
I am too.
And so I'm okay with working that much when Jake, may have a little bit more of a concept of the work-life balance, something that I probably should get better at, but I think that comes with time.
Yeah, what you're saying is naivety could be a great thing. And,
yes.
And
naiveness.
I wish I was more naive in a lot of things that I'm overanalyzing, right? Analysis paralysis is the opposite of naivety, and neither are great.
Yeah, I mean, it's all calculated risk when it comes down to doing stuff, right? Like, when I bought my rental property, right, I could run the numbers 15 different times, but if like both tenants don't pay and the roof bursts out, I'm screwed. But I was like, okay, well, if that happens, I go live with my parents, right, and save up for a year or two. What if
when you bought your first rental property, did you run numbers the same way you would run them now? Meaning as diligent?
I mean, here's the thing. I was house hunting for 2 years. This house was my fifth house under contract. So I had it down after a while. Like it was a lot, right? But like looking back at it, did I jump under contract to some houses in Montclair that would have been way overpaid? Yeah. But like, thank God I didn't get them.
Yeah, I have my first house, I knew way less than I do now, and I ran numbers differently. But again, that's where naivety worked in my favor. Actually, my first two houses.
I think projecting out expenses of stuff was probably where I just kind of jumped into it, because I tried to teach myself, but like now I know much more conservative running the numbers versus then. I was like, I want a house. I'm going to make it work.
And you're glad you did.
Yeah. Yeah, I'm glad I did it. I mean, it taught me a lot, to kind of see what's going on, and also kind of just working in this industry too, where I see everyone's financials of all the real estate they own, has kind of taught me what's a better deal and what's not a good deal, right? Like we have a mortgage lending side of our business. We have an investment side of this business. So I'm talking to lenders and stuff too every day. So it's kind of like, especially like this last project, trying to go into the commercial space is so much different than residential, right? Because when I ran the numbers originally for the commercial, I'm like, oh, this is a great deal. But like the appraisals are double, the attorney costs are double, the time frame for everything is triple. Like I didn't know that, but I kind of jumped into it. Now I know better, right? But so did the process change in terms of like analysis? The bones are still there, but like I've tweaked other things to make it better. Now I know.
It's similar though with the business itself too, because you as a realtor, I'll show a client 20 houses, or a year ago, I'll show a client 20 houses and then they ghost me. Yeah. And I'm like, what the heck did I just do? I just wasted however many hours. Yeah. It's just getting smarter. It's learning the mistakes, and then how do I not do that?
I believe it's more smarter, I believe is what you were looking for there.
Wow, nice job.
Let's go.
Man.
Love that. Boy. Love that, Ben. Yeah, no, it is more smarter. So speaking of, is starting those systems that you were just saying, when you're systematizing that pipeline of the clients, is that just for the service of it, or is that for the lead gen side?
So I think we're constantly tweaking things to make things better from our side of things and also the clientele side of things. Like I know Jake loves getting all the notifications from TaxDome, right? So we've gotten feedback from clients of like, hey, don't send one every 3 days. Great, right? like just like you're tweaking systems, right? I mean, that's what you're doing all day long is figuring out what works, doesn't work. Oh, let's try this. Oh, that was terrible. Scratch that. We're going to tweak it this way. Right. I mean, it's just kind of it's a learning curve. Same with real estate analysis, same with business, same with anything really. Just like you're just figuring it out. Like, and at the end of the day, you'll find what works well for you. Something that may work well for our business might not work well for you guys, right? In terms of lead gen or systems in place, like just from a different business and different personality perspectives, things work. Some things work, some things don't. So just kind of trying to figure that out is kind of the overall putting systems into place. But I think it helps, as I like to say with our planning clients, we have quarterly calls that we get into place just to keep everybody accountable, right? Because at the end of the day, like, yeah, we might not need all of them, or like we might have calls in between, right? But like at the end of the day, it works from a system perspective from us. For we know we're checking in with them, so they're getting the client services, right? From the warm fuzzy feeling, but also from our perspective, just not forgetting about them because we could have a strategy that works well for them, right? So it's just kind of always tweaking things and putting things kind of into system to help work better.
Who files your taxes?
I do.
You do?
Yeah.
Conflict of interest at all, or is that?
No, it's perfectly okay to file your own taxes. I mean, that's what you're doing on TurboTax right now. So
yeah, sure. That's true. That's true. So a newbie question that I have is, at any level, how do I word this? At what level is it like expected that you're not like, okay, so obviously everyone works really hard for their money.
Yeah.
But at what level is there a level where you're like, I'm not going to pay taxes? Like, is that even a thing?
Wait, what?
Like,
what?
You have
like evade or
not evade, but be able to have enough write-offs, whether it's like owning real estate or having deductions from your business. Is there a point where that's like okay to do?
So, I mean, the thing we like to do is legally, morally, and ethically utilize the tax code to lessen your tax exposure. Right? It's another keyword there. But essentially, like, we have clients that on paper don't make any money, but they're clearly making money because we're utilizing cost segregation studies. We're utilizing all these different strategies, right? To essentially, on paper, they, again, following the tax code, show no income. That's why you have you hear about all the times, like the rich people of the world don't pay any taxes, right? Well, it's because it's a tax code. They're following the tax code. So is there a level where that comes into play? I mean, yes, but it really depends. Someone that's making $50,000 a year may not be a good fit to do one strategy because the tax savings is going to the cost to do the tax strategy is going to outweigh the tax savings, right? So that's where, when you're in the higher tax brackets, you can kind of work a little more because sometimes the benefits greatly outweigh the costs, right? To kind of answer your question, no, there's not really like an income level, but when you become like an accredited investor, which is like, I think $300,000 a year or $1 million net worth, that's where you can kind of play ball. But again, there's other strategies, or you could buy a house and rent a property, cost seg it, and your tax bill is zero, right? Like there's all types of things.
Yeah. We'll be doing that this year, by the way, Ben. Bought a property this year.
Yeah. How is that property doing?
Great. We'll talk about it off air.
Okay. All right.
Dylan, you should really not file taxes yourself, because these conversations I have often with Ben, they really do teach me a lot, because I still don't fully get it. Ben, I think you'd be the first to say that too, that I don't fully get it.
You're not the only one. Yeah.
I don't fully get how I get how a cost segregation study works, but I don't get how that can then like make its way into different tax that I have to pay, like that combination of things. But Dylan, you would learn a lot just by doing more, hiring more, I guess.
Yeah, I'm definitely going to need it this year.
Yeah.
I got to be creative this year. But
not even
Ben,
that. Yeah. Yeah. Go ahead.
Yeah, no, I mean following the tax code. Let's keep it. Let's not screw myself over.
It's just a lot to understand about it. I'm trying to think of an example for myself, but other than cost seg. But that I know that really helped me in previous years.
Yeah, I mean the S corp
election. I didn't know about it.
That, yeah,
the S corp. That's a great one. That's Dylan, dude. As a realtor, get on that because.
So S corp, I could just be paying myself. That's all that I know from S corp.
So essentially, yeah, you pay yourself a reasonable salary. The rest is considered distributions, and you limit the self-employment tax that you pay. So that's your savings. That's kind of like the gist of it. Yeah. So that's kind of like where the cost of running payroll, of setting everything up, if that outweighs the tax benefits, there you go. That makes sense. So yeah.
So we'll definitely talk more after. But yeah, Ben, this has been great having you on.
Yeah, thanks for having me on, guys. Appreciate it. We didn't even get into how the Yankees.
I was going to say we didn't talk
Luke Weaver, and he's become a starter for the Mets. I don't even understand that.
Starter? I know he's with the Mets. He's doing,
they're going to have him as a starter.
Same as Holmes. Yeah. We didn't get into some hot stove talk, but that's why we'll have you back on. With our baseball episode. Cool. Ben, where can we find you? Where can we find more info?
Yeah, I mean, so we have our website, Nashional, Nashional, taxplanning.com. I mean, we're also on LinkedIn. Also, feel free to put my email address in here. Happy to have people reach out and have conversations.
So National, like Steve Nash, the basketball player, Nash?
Yep.
Got it.
Exactly.
Awesome. And then we're gonna link Ben's iPhone number down below in the description as well.
As long as Jake doesn't have it, I'll be okay.
Love it. Ben, thanks so much for coming on. Everyone listening.
Great episode.
Like, comment, subscribe to the More Smarter Show.
Only if you like it.